Hey everybody, this is Richard. Today's the 29th of August. It's a Tuesday. And I wanted to do this quick video just highlighting a trade that we're in. So the Emerald day trade algo, which is this one here, it actually bought this morning. And we got a fill of around 44.54 and a quarter. And right now, the S&P's at about 45.03. So we're up a decent amount. In fact, the matrix shows that we're up about $2,462 per unit traded right now. Now the Emerald Long is traded in a few different algorithms that we offer. It's traded in the Elite Trader along with these other 5 algos. It's traded in the Trader Plus, which is in essence the Emerald Short, the Emerald Long, which is these two up here. And then it adds to it the Day Trade V1, V2, I'm sorry, which is this one down here. And so that's the Trader Plus, those 3. And that, by the way, trades in $25,000 unit sizes. The Elite Trader trades in $35,000 unit sizes. And so the extra 10K is needed really because of this overnight algo, this one down here. Now, there's also the Trader Plus, and that trades 3 different strategies in $25,000 unit sizes. It trades the Emerald Long, which is this one here. It trades the Day Trade Long V1, which is this one down here, and then the Geronimo overnight algo, which is this one down here. So you put it all together though, and Emerald Long is traded in all 3 of those different systems. It's also traded in some of the other legacy algos, the Paladin, the Noble, and but so far this trade is up a decent amount. Now, the algorithm, so it's about 152 right now. That's Mountain Standard. So on the East Coast, that's 352. And what we're looking for is the market to close. And as soon as the equity markets close in about 8 minutes, we're going to get out of this trade. And at this point, that's, unless it somehow rallies and hit our target, which is 45.18 and a quarter, which when we get into this trade, that target seemed pretty far away. But when you have about a 50-point gain, like we've seen, then suddenly that starts coming into view and into play. So if the market rallies and hits that, we'll get out. If the market just, if some news comes out or something and it just collapses, then we could get stopped out. But more than likely what will happen is we're going to hold for another 8 minutes, and then the equity markets are going to close, and we're going to get out and log hopefully a gain, hopefully a decent gain. Hopefully it stays at about this level or maybe even drifts higher. That's the Emerald Long though. That's this algo here. And in this video, the intent was really just to focus on the Emerald Long strategy. Since that's the one we're in, I thought maybe I could just do a quick video on it. So I've already kind of talked about what it gets traded in. And for those of you that don't know, these are fully automated trading systems. So there's it's not like you get kind of an email and you have to manually do the trade. These are all auto-executed under what they call a letter of directions. That's how these strategies are traded, but with a few of the different brokers that support the algos. But if you look here, this is just an equity curve of the strategy going all the way back to 1997. And so this obviously is a back test or kind of a hypothetical account that it's showing here. And it's common with algos to display this kind of thing. This algo though has been live really since around November of last year. And so it has been live for a decent amount of time now. Let's see, I guess about maybe 9 months almost. So it's been live a while, and that's good that it continues to do pretty good. Not just in the back test, but in the live trades. That's one thing that is pretty important when you develop algos. So so we got another 5 minutes now. Let me just kind of show you the performance report. So here's the performance report. So this shows just all the back tested report for all the trades going all the way back to 1998. Now, the profit factor is about 1.46, and that's just a ratio of the total net profit to the gross, or to the gross profit to the gross loss. That's what that shows. And so 1.46 is a pretty good profit factor. I mean, people have different views on what that should be or what an ideal profit factor is. I like profit factors that are between like 1.3 and about 2. I think that's ideal. anything lower is just not a good algo. I mean, it's not going to be profitable. Even if it's 1.2, 1.1, that's in my opinion not enough kind of margin for error. And if it's too high, a profit factor of like 3 or 4 or 5, then more than likely that's a result of just a curve fit. And I'm not saying that is 100% the case, but more than likely, my opinion is anything above 2 is probably the result of some kind of curve fitting. Now I know there's people out there that would disagree with me on that. That's just my opinion. As far as the win rate goes, it's got about a 48% win rate. Let's just call it a coin flip. It's 50-50. There's about 1,500 trades in the back test, and about half of them are profitable, a little under half. Now, the reason why this algo overall is profitable, though, is because the winners tend to be better than the losers. That the average gain is about $370, where the average loss is about $242. Now, the one thing I'll point out, though, is that this includes all the way back in 1998, and because it's a dollar amount, it gets a little tricky, because back in 1998, the S&P, let's say the S&P was trading at 1,000, where it's at 4,000 now. So if the S&P had a 1% gain, that would be a gain of 10 S&P points, which would be $500. Well, a 1% gain today would be about 44 points, or about about a little over $2,000, since each point is $50. So back in 1998, a 1% gain would have been closer to about, I guess it's about $750, and nowadays a 1% gain is about a little over $2,000. And so that's why when you do a dollar amount on these performance reports, it can be a little misleading, because $368, which is just about 7 points, that meant more even just kind of 10 years ago, let alone back in 1998. And so that's why the dollar amounts can be a little tricky to kind of look at. I like to look at different periods. So I'll look at kind of 2017 until now, and then I might look at another period just to kind of see what kind of the more recent. In fact, when you look at this equity curve, one reason why this goes exponential like this, in my opinion, is because in this era, 2018, 2019, 2020, the S&P was at a higher point value, and so the gains just happen to be bigger. And so compared to back in 1998 or even some of these other periods. Now, every algo, though, has moments where it struggles a bit, and for sure this one had a period where it struggled, kind of beginning in 2009 until maybe 2018. And so that's a decent amount of time. But the nice thing about trading a system, though, in other words, trading all 5 different strategies in the elite trader at least, is that you have multiple strategies. And so even though this one might just kind of be going sideways, you're going to have other ones that should do really well. And so that's why it's good to diversify. And right now, this algo happens to be the one that's just doing the best out of all of them. And so it just continues to really amaze me at how well it's been doing since it went live in November. But again, going back to this report, I mean, you can also look at the drawdown is another pretty important thing to look at. All right, but let's go ahead and watch it. It's about to exit. And so let's just see how it exits. And it looks like we're getting a little pop as the market's closing. So that's good. And let's see where we get out. A couple more seconds here. And there we go. So we got out at around 45.05. So this was a great trade, a really good trade, solid. It even popped as the market was closing, which gave us a really good fill on the exit. Yeah. So if we look at this strategy, though, so right now it looks like we closed up about $2,500. And so let me just show you kind of what that is on a percent gain for the different systems. Okay, so on the Elite Trader, that's a gain of about 7.3%. So we had, on this one trade, we made about 7%. Not bad. Now, if you look at it on the Trader Plus or the smart pivot, which trades in $25,000 unit sizes, then that's a gain of about 10.2%. And so the smart pivot and the Trader Plus up about 10%, and the Elite Trader up about 7%. So not bad today. Remember, this is fully automated. This wasn't me pulling the trigger on this trade. This is the algo that I developed, deciding to do the buy this morning. And then it held the entire day. And if you're curious on how it does it, I mean, I think it's probably obvious that I'm not going to share the strategy. I mean, that's the company's IP, that I developed. And so, I'm not gonna share that. But to give you an idea, these dotted lines that you see on the chart here, these really just represent what the strategy or what the algo is looking at. And so if you think of each one of these lines as a different state that the market could be in, so this one is strong up, this one is weak up, this one is weak down, and this one is strong down, then it basically, every time a candle is created, it's saying what kind of market are we in? Are we in a strong down or a strong up or a weak down? And whenever you get the forward slash, like you see here, that means that the algo doesn't think we're in that kind of market anymore. And if you were watching this morning, when it triggered, it would have looked kind of like this, where you have two candles that are created. So the market's open about 20 minutes, and at that point, the algorithm thought we're not going to be in a strong down today. But we could still be in a weak down, and we could be in a weak up or a strong up. But then as the day continues, it got rid of the weak up at about this point. So it said, well, we're not going to be in a weak up, it doesn't think. And that's probably because it was closing above the previous day's high. But it's really looking at a bunch of different things. There's about, I believe it's about 15 different things that this algo is looking at to try to determine what kind of state the market is in. But it got it exactly right. I mean, it throughout the whole day, you don't see the forward slash occur until the market closed, which means the entire day it was saying we're in a strong up kind of market. And so that's why it held the entire day. Now, if we go back, since I'm focusing on this algorithm, let's look at this day. So this was yesterday. We actually had a loss yesterday. And this loss, we got in at about 44.41, and we got out at about 44.30. So that was a loss of about 12 S&P points. So we lost about $600 on this trade, but again, we made about $2,400 on this trade. And so, but in this case, the algorithm began the day thinking we were in a strong up. See, up here, and it said, nope, we're not in a strong down, and we're not in a weak down. And so it held on to the trade until you got this forward slash. Once we got the forward slash here and it said, well, we're not in a strong up either, then what the algorithm does is it just looks for any kind of pop and then it'll get out. Now, in this case, it doesn't look like a pop, but because that candle was green, it got out. That's really what it was doing. So that was yesterday, and if we keep going back, you're going to see another trade that was similar to the one today, where the algo just got it perfectly right. I mean, look at this. We got in 20 minutes after market open. No strong down, maybe a weak down, but also maybe a strong up or a weak up. And then as the day continues, it finally says, well, we're not in a weak down either. And then again, this one also held until the close. And this was another pretty big gain. This was about a $1,500 gain. I did a video on this one as well. But this is the Emerald Long. I mean, this is what it does. It gets in, and it's really looking for these strong up kind of days. And when we have one like today, it can be pretty huge gains. And when we're wrong, it tries to limit the losses, kind of like it did over here. Now, this algorithm is not perfect. There's definitely losing trades. It has months where it won't do well. But again, that's why we trade multiple strategies. It's a way of diversifying. This algorithm tends to do good in up moving markets, but also sideways moving markets. And the Emerald Short, which is this one over here, that one does good in kind of strong down, but it can also do good in sideways moving markets. And so what we do is we try to cover every case. We try to cover a down market, a sideways market, and an up market. And then when it's in a villain state, in other words, when the market is going lower, so in other words, it's not going sideways and it's not going higher, it's going lower, that would be the villain state for this algo. then what it'll do is it'll just sort of try to minimize the losses so that the algos that do good when the market is going down, like the Emerald Short or like these kind of short covering rally algos, then it'll just let those take over. But the key is it tries to minimize the losses in those cases. But that's the Emerald Long. It had a great day today, so it's an easy day to do a video on it. For sure, I'm showing you the positive. I'm showing you a winning trade. We have losing trades for sure. So keep that in mind too. I'm definitely highlighting the positive, but remember that trading futures, it does involve substantial risk of loss. It's definitely not for everyone. It should only be used with risk capital. Remember, I'm not a CTA. I'm what's called a third-party developer. So I offer the algorithms to be traded under a letter of direction. And then finally, remember that past performance is not indicative of future performance. So just because we had a good trade today doesn't mean we're going to have a great day tomorrow or moving forward, the algo will continue to work. You just never know. There's risk in trading. But what I'll say is that these algorithms are carefully designed. They've been running live for quite a while now. And for the most part, the live performance on them has been really good. On the Emerald Long, since it went live in November, it's just done incredible. And so, my expectation is that'll continue. I monitor these algorithms really closely. I compare the live trades against the back-tested trades to make sure that the win rate is consistent, that even the profit factor is similar, and then also the drawdown and the average gain per trade. Those are kind of the main things that I look at to track the algo. But if you are looking for an automated strategy, maybe you're ready to get rid of your emotions from trading, then I'd encourage you to check out what we do. I'd be happy to give you a demo one-on-one and show you more what we do, answer any questions you have. But thank you so much for watching. I hope you have a great day. Bye-bye.